What is happening, crypto enthusiasts? Get ready for a whirlwind of updates that are reshaping the digital asset landscape. The market is moving at lightning speed, and if you're not plugged in, you're missing out on the biggest stories. We've got groundbreaking shifts, critical analyses, and future-defining trends all packed into this episode. You absolutely do not want to miss what's coming your way. Stick around, because the future is being written right now, and we're here to break it all down for you. Let's dive in. First up, we're tackling a fundamental question. Can Bitcoin truly be the ultimate shield against global instability, or are there deeper considerations we need to unpack? We'll explore the arguments and the counterarguments that question Bitcoin's role as a universal panacea for economic turmoil and systemic risks. Is it the escape hatch we think it is, or is there more to the story? Next, we're shifting gears to compare the long-term resilience of digital assets with one of humanity's oldest stores of value. We're diving deep into whether Bitcoin possesses the inherent characteristics needed to stand the test of time, much like its traditional, tangible counterpart. Prepare for an analysis that will challenge your perceptions of digital scarcity and enduring value. Then, we pivot to a fascinating intersection of innovation and tradition. How is blockchain tokenization, particularly with the rise of digital gold concepts and Bitcoin itself, positioning itself as a new standard in a world grappling with post-crisis economic realities? We'll explore the competitive dynamics and the potential for these digital assets to redefine wealth preservation. And finally, prepare for a seismic shift in the digital asset arena. We're talking about Ethereum not just keeping pace, but potentially leapfrogging Bitcoin in the eyes of investors. What's driving this monumental surge, and why are major players betting big on the future of programmable blockchains? We've got all the details you need to understand this game-changing development. You won't want to miss this. Make sure you hit that subscribe button, turn on notifications, and join the Bitcoin Bulletin community for all your essential crypto insights. Can Bitcoin truly shield us from global chaos? In an era marked by economic uncertainty and systemic risks, the narrative often positions Bitcoin as the ultimate safeguard, a digital fortress against tyranny, inflation, and market collapse. But is this narrative entirely accurate? This in-depth analysis delves into the complexities surrounding Bitcoin's potential as a universal solution to global crises. We examine the core arguments that support its role as a decentralized, censorship-resistant asset, capable of preserving wealth when traditional systems falter. The discussion explores how Bitcoin's fixed supply and decentralized nature offer a compelling alternative to inflationary fiat currencies, potentially acting as a hedge against government overreach and financial mismanagement. We will dissect the technical underpinnings that enable its resilience, such as its distributed ledger technology and cryptographic security, which theoretically make it immune to the devaluations and manipulations that plague traditional financial instruments. However, the conversation doesn't stop at the bullish case. This exploration critically evaluates the limitations and challenges that Bitcoin faces in truly acting as a panacea. We address concerns about its price volatility, which can be extreme, making it a risky store of value in the short to medium term. The scalability issues and transaction fees, especially during periods of high network congestion, are also scrutinized, questioning its practicality for everyday transactions or rapid wealth preservation during a crisis. Furthermore, the analysis considers the regulatory landscape, the potential for government intervention, and the practical hurdles of widespread adoption as a true safe haven asset. The role of centralized exchanges, the security risks associated with private key management, and the environmental concerns surrounding its energy consumption are also brought to the forefront. Ultimately, this piece aims to provide a balanced perspective, moving beyond the hype to assess whether Bitcoin's revolutionary potential is matched by its current real-world capabilities as a shield against the multifaceted threats of global instability. This is a crucial conversation for anyone looking to understand the true potential and limitations of Bitcoin in turbulent times. Next, we'll be examining if Bitcoin has the enduring strength to rival gold's long-standing status as a trusted asset. Does Bitcoin have the long-term strength of gold? For centuries, gold has been the benchmark for enduring value, a tangible asset that has weathered economic storms and geopolitical upheavals, earning its reputation as the ultimate safe haven. Now, in the digital age, Bitcoin has emerged, often touted as digital gold, promising similar, if not superior, qualities of scarcity, portability, and decentralization. This analysis dives deep into the comparative staying power of Bitcoin versus traditional gold, exploring whether the digital asset truly possesses the inherent characteristics needed to become a lasting store of value in the long run. We will scrutinize Bitcoin's unique attributes: its fixed supply cap of 21 million coins, its decentralized network secured by cryptography, and its growing adoption as a financial asset. These features are often cited as reasons for its potential to outlast and even supersede gold in a future digital economy, offering a hedge against inflation and currency debasement. However, the comparison raises critical questions about durability, divisibility, and universal acceptance. Unlike gold, which has a millennia-long history of being recognized and valued across diverse cultures and economic systems, Bitcoin's history is relatively short, and its value proposition is still being tested. We will examine the physical properties of gold, its incorruptibility, its use in jewelry and industry, and its tangible nature, which contribute to its intrinsic value and widespread trust. Conversely, Bitcoin exists purely in the digital realm, making it susceptible to technological obsolescence, cyber threats, and regulatory crackdowns. The analysis will also consider the practical aspects of each asset. Gold's portability challenges versus Bitcoin's digital accessibility, the complexities of storing and securing private keys for Bitcoin versus the relative ease of holding physical gold, and the established infrastructure for gold trading versus the still evolving ecosystem for Bitcoin. Furthermore, we will explore the psychological and societal factors that underpin gold's enduring appeal. Its historical significance, its role in central bank reserves, and its deep-rooted cultural perception as a symbol of wealth and security are powerful forces. Can Bitcoin, despite its technological innovation, replicate this level of deep-seated trust and perceived permanence? This deep dive aims to provide a nuanced perspective on whether Bitcoin's digital scarcity and innovative technology can truly compete with gold's centuries-proven resilience and universal recognition as the ultimate store of value, or if it remains a volatile digital asset with an unproven long-term track record. This comparison is essential for understanding the future landscape of value preservation. Next, we explore how blockchain tokenization and digital gold are shaping a new financial standard in a post-crisis world. Blockchain tokenization and digital gold, the new standard. In the wake of global economic instability and a growing distrust in traditional financial systems, a new paradigm is emerging, one where blockchain technology and digital assets are poised to redefine wealth preservation. This analysis delves into the burgeoning world of blockchain tokenization and its intersection with concepts like digital gold and Bitcoin, exploring how these innovations are competing to establish a new global standard for value in a post-crisis era. We examine tokenization not just as a buzzword, but as a fundamental technological shift that allows for the digitization of real-world assets, from real estate and art to commodities and even intellectual property, making them more accessible, liquid, and transparent. This process, powered by blockchain, offers the potential to unlock trillions of dollars in illiquid assets, creating new investment opportunities and efficiencies that traditional finance struggles to match. Central to this discussion is the concept of digital gold. While Bitcoin has long been the primary contender for this title, the broader landscape is evolving. We explore how tokenized representations of gold, or other precious assets, are emerging on blockchains, offering the benefits of digital transferability and fractional ownership while retaining the perceived stability and historical value of their underlying physical counterparts. This creates a fascinating competitive dynamic, where Bitcoin, with its decentralized ethos and fixed supply, must contend with these more tangible, tokenized representations of traditional value. The analysis probes the strengths and weaknesses of each approach. Bitcoin's inherent scarcity and network effect versus the potential for tokenized assets to offer greater utility, regulatory clarity, and a direct link to established, tangible value. We will also investigate how these digital assets are positioning themselves as alternatives to fiat currencies and traditional banking systems, particularly in regions experiencing hyperinflation or capital controls. The ability to hold, transfer, and even transact with tokenized assets or Bitcoin globally, without intermediaries, presents a powerful proposition for individuals and institutions seeking financial autonomy and resilience. The piece will consider the technological advancements, regulatory developments, and market adoption trends that are shaping this evolving landscape. Are we witnessing the birth of a new gold standard, one built not on physical metal, but on secure, verifiable digital ledgers? This comprehensive look at blockchain tokenization, digital gold, and Bitcoin aims to illuminate their competitive positioning and their collective potential to fundamentally alter the global financial architecture in the aftermath of economic crises. This is a pivotal moment for understanding the future of finance. Next, we're breaking down the news that Ethereum might be overtaking Bitcoin as investors look to programmable blockchains for future growth. Ethereum surpasses Bitcoin. Investors bet on programmable blockchain future. Ether, the cryptocurrency powering the Ethereum network, has achieved a significant milestone, reaching a new all-time high of $4,945.60 on August 24, 2025. This surge not only breaks its previous record set in November 2021, but also signals a potential shift in investor sentiment, with Ethereum increasingly being viewed as a more compelling investment than Bitcoin by some market participants. The driving force behind this impressive climb appears to be a confluence of factors, prominently including robust institutional demand and the growing anticipation surrounding Ethereum exchange-traded funds, ETFs. Several forward-thinking companies are actively incorporating Ether into their investment strategies, drawing parallels to the aggressive crypto acquisition approaches pioneered by figures like Michael Saylor, known for his company's substantial Bitcoin holdings. Notable companies such as SharpLink Gaming, Bitmine Immersion Technologies, and Ethzilla have publicly announced the addition of Ether to their corporate treasuries. This trend of institutional adoption, where established businesses are diversifying into digital assets, particularly Ether, is a strong indicator of increasing maturity and acceptance within the broader financial ecosystem. The influx of corporate capital not only boosts demand, but also lends credibility to the digital asset space. Concurrently, the increasing interest in Ethereum-based ETFs is providing retail and institutional investors with more accessible avenues to gain exposure to the cryptocurrency market, further fueling demand and contributing to price appreciation. Analysts point to a general improvement in market sentiment and a growing bullish outlook, with some attributing potential future gains to advancements in regulatory frameworks and the expanding adoption of stablecoins on the Ethereum network. Ethereum's unique economic design also plays a crucial role in its upward trajectory. The network has historically maintained a neutral or even negative net issuance rate for new coins, effectively creating a deflationary pressure on its supply as demand grows. This scarcity mechanism, combined with increasing demand, naturally supports upward price movements. Unlike Bitcoin, which is primarily recognized as a digital store of value, Ethereum is engineered as a versatile, programmable blockchain. Its core innovation lies in its support for smart contracts, self-executing contracts with the terms of the agreement directly written into code. This programmability has made Ethereum the foundational platform for the explosion of decentralized finance, DeFi, non-fungible tokens, NFTs, and a myriad of other blockchain-based applications, particularly in sectors demanding high levels of trust, transparency, and automated execution. Launched in 2015, Ethereum was envisioned by Vitalik Buterin and its co-founders as a platform to decentralize the internet. Its operational model, where users pay transaction fees, gas, to execute computations on the network, aligns user incentives with the network's health and functionality. This inherent flexibility and broad utility differentiate it significantly from Bitcoin's more singular focus on being a digital currency. Market analysts remain optimistic, with some prediction markets suggesting that Ether could even reach $5,000 despite minor pullbacks. The combination of sustained institutional interest, potential regulatory clarity, and Ethereum's expanding ecosystem solidifies its position as a key player in the future of digital finance. This development highlights a significant trend in the crypto market. Stay tuned for more updates as we continue to track these exciting market movements. All right, crypto fans, that's a wrap on today's explosive news. We covered Bitcoin's role as a shield against global chaos, its staying power compared to gold, the rise of blockchain tokenization and digital gold, and Ethereum's incredible surge past Bitcoin driven by its programmable future. Don't miss a single update. Hit that like button, subscribe to Bitcoin Bulletin, ring that notification bell, drop a comment below, and follow us on all social platforms so you never miss a beat in the fast-paced world of crypto.